What are life insurance riders and supplementary benefits? Life insurance riders and supplementary benefits are optional features you can add to a life insurance policy to customize it and provide additional protection. While the terms are often used interchangeably, riders generally offer extra benefits upon the policyholder's death, whereas supplementary benefits provide advantages before the life insured dies. You can typically add these features when you first get the policy, but sometimes they can be added to an existing contract. Most riders and supplementary benefits can be applied to both term and permanent life insurance. Adding them usually requires paying an additional premium. The one exception is the paid-up additions, PUA rider, which can increase a policy's cash surrender value. Riders that provide additional death benefits here are some of the most common riders that expand the death benefit of a policy. Paid-up additions, PUA rider. This rider is available with whole life or universal life, UL policies. It allows the policyholder to pay extra lump sum premiums to buy small amounts of permanent life insurance. These paid-up additions increase both the death benefit and the cash surrender value of the policy. The PUA rider is underwritten at the same time as the base policy, so you don't need additional proof of insurability when buying more coverage. However, contracts usually place limits on the amount and frequency of PUA purchases. Term insurance riders. This type of rider adds extra death coverage for a specific, limited time. It can cover the primary insured person or another individual, such as a spouse or child. The coverage amount can be independent of the base policy and may even be for a greater amount. A term insurance rider's duration cannot exceed that of the underlying base policy. To avoid losing the coverage when the base policy expires, look for a rider with a conversion option that allows you to convert the coverage to a standalone policy without providing proof of insurability. Family coverage rider. This rider is a common addition for those with a spouse and children. It is sold in units that cover all eligible family members. The coverage amounts are usually limited but are often sufficient to cover funeral or burial expenses. The premium is based on the spouse's age at the time of issue, and the number of children covered does not affect the premium. Every child, including adopted children, is automatically covered once they are 15 days old. Coverage usually continues until a certain age, such as 21 or 25, while spousal coverage may end at a specific age like 65. Child coverage rider. This is for policyholders who want to cover their children but not their spouse. Like the family coverage rider, every child is automatically covered after 15 days of age without an increase in premium, and coverage continues until a specified age. Converting child or family coverage riders. A child covered by a child or family coverage rider can often convert their coverage to an individual permanent life insurance policy without providing proof of insurability. Some riders allow the child to purchase up to 5 times the original coverage amount. The premium for the new policy will be based on the child's age when it's issued. Accidental death, AD, rider. This rider provides an extra benefit if the life insured dies as a result of an accident. It's sometimes called double indemnity because the benefit can be a multiple of the base death benefit, commonly 2 times the amount. An accidental death is defined as one that results from an unexpected, violent, or traumatic event. The death must occur within a specific time frame after the event, and the rider typically excludes deaths from suicide, self-inflicted injuries, war, or committing a crime. AD rider coverage may have age limits. Guaranteed insurability benefit, GIB, rider. A GIB rider gives the policyholder the option to buy more life insurance coverage in the future without proving their insurability. The premiums for the new coverage will be based on the insured's age at the time of the increase, assuming their health is the same. This is useful for those who can't afford or don't need a large amount of insurance now but anticipate needing more in the future. GIB riders usually have restrictions on when you can increase coverage and the maximum amount you can add. Supplementary benefits. These benefits may be available before the life insured's death and may or may not affect the final death benefit. Accelerated death benefits. These benefits allow the policyholder to receive a portion of the death benefit before the insured dies if certain conditions are met. They are also known as living benefits. Terminal illness, TI, benefit. This benefit allows you to get an advance on the death benefit if the insured has a terminal illness with a prognosis of a fixed period of time to live, such as 1 or 2 years. Many insurance companies include this benefit in their policies without an extra premium. The benefit is tax-free and reduces the final death benefit paid to the beneficiary. Dread disease, DD, benefit. Also known as a critical illness, CI, benefit. This pays a lump sum if the insured is diagnosed with one of the specific conditions listed in the contract. The insured doesn't have to be in danger of dying, but the diagnosis must be confirmed by a doctor. Common conditions covered include heart attack, stroke, and life-threatening cancer. This benefit is usually paid out as a lump sum after a waiting period, such as 30 days after diagnosis. If the payout reduces the death benefit, it's an accelerated death benefit. If the payout does not affect the death benefit, it is likely a separate critical illness rider that requires an additional premium. Accidental dismemberment benefit. This is usually combined with an AD rider to form an accidental death and dismemberment (AD&D) rider. It pays a lump sum if the insured loses a specific body part or function due to an accident. The losses and corresponding payouts are outlined in a schedule of loss. Waiver of premium for total disability benefit. This benefit waives premiums on the life insurance policy, including those for riders and supplementary benefits, if the insured becomes totally disabled. The definition of total disability can vary by policy. While premiums are waived, the policy's benefits, such as cash value growth and dividends, continue to accrue. A waiting period is required before premiums are waived, and some policies will retroactively waive premiums from the start of the disability. Parent/payer waiver benefit. This is similar to the waiver of premium benefit, but it applies when the policyholder is not the same person as the life insured. For instance, it can be added to a child's policy to waive premiums if the parent/policyholder becomes disabled or dies. Key considerations when deciding whether to add riders and supplementary benefits. Consider these factors. Cost. Each rider has a cost, which is usually an additional premium. However, getting coverage through a rider can be cheaper than buying a separate, standalone policy because you only have to pay one policy fee. Value of coverage. Ask yourself if the coverage provides the protection you truly need. For example, a basic policy might not fully meet your needs if it only pays out a higher benefit for accidental death, as your family's financial needs will be the same regardless of how you die. Limitations and exclusions. Be aware of what conditions would trigger a payment and what the limits are. Also, understand any conditions under which a payment would not be made, such as deaths from self-inflicted injuries, war, or crime. Differences between companies. Unlike the core death benefit, which is standard across companies, the terms and conditions for riders and supplementary benefits can vary significantly between insurers and even between different products from the same company. When comparing policies, pay close attention to the specific terms of these optional benefits.